Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, good to be back.
John, Rio Tinto has announced that it's recovering scandium from its titanium dioxide plant in Quebec and is also working on making a master alloy for aluminum scandium. Is this good or bad news for our Discovery Watch Juniors Clean Tech and Scandium International?
Well, you might think this is bad news because you have one of the biggest mining companies in the world suddenly getting into the scandium game, and you would think, these guys are just going to leapfrog whatever the juniors want to produce and just dominate the market, and the little guys will be out of luck. But in fact, that's not really what is happening. It is, in fact, really good news for juniors like Cleantech Holdings and Scandium International, who have projects for which definitive feasibility studies have been done to be put into production as primary scalable sources of scandium. Each of those projects are capable of 100 to 200 tons of scandium oxide per year. But the total supply right now is only 20 to 30 tons of scandium, and that's worth a piddling $50 million. And there's this chicken and the egg problem of what comes first, the offtake orders or the supply. And for the supply to be first, you need to have $100 million invested in the ground. And then you have a problem that the end users jerk you around and decide they are not going to come just because you built a field of dreams. So the juniors have been kind of stuck, and the market's gotten tired of hearing about scandium, the wonder metal that alloyed with aluminum is going to make aluminum-based lightweighting a big possibility around the world. Now, Rio Tinto acquired Canada's Alcan in 2007 for $38 billion. It's got a huge aluminum complex at Saguenay-Lac-Saint-Jean in Quebec, and it churns out 1.2 million tons of aluminum a year. That's worth $2 billion. It also has an iron titanium mine at Havre-Saint-Pierre, which is on the St. Lawrence Seaway, and that's the biggest ilmenite mine in the world. And ilmenite is the mineral that contains titanium. Now, they mine this ore and ship it down to the Fur-et-Titan facility at a place called Sorel-Tracy, and that's about an hour northeast of Montreal. And what they do there is they have their furnaces which manage to separate the iron from the titanium, and the titanium ends up as a slag that's over 80% titanium dioxide, and this ends up being sold to paint makers as a pigment. Everybody thinks of titanium as this fabulous metal that's really strong stuff is made out of. The military, aerospace uses it, but less than 5% of global supply goes into those applications. The rest of it is really boring. 95% goes into the paint industry, and it all disappears because you do not recycle paint. So all this titanium that's produced just disappears throughout the world annually. The Chinese were shown by Bloom Energy, which needed scandium oxide for their Bloom boxes, how to recover scandium from the waste streams created during the titanium dioxide pigment production process. And it only works with an older process called the sulfate process, and the Chinese are still using this older process. So much of the scandium that's coming out of China these days is surplus byproduct from these titanium dioxide waste stream cleanup operations that Bloom doesn't need. But what Rio Tinto, they haven't been really clear about what they have accomplished, but they seem to be saying that we figured out a way without interfering with the actual operations to recover scandium from our titanium dioxide production circuit. And it's not very capex intensive, and it's we are able to produce high purity, and we're excited about the future for aluminum scandium alloy, and they're even putting effort into making master alloy. And you sort of scratch your head and say, well, this is given that the entire market's worth only $50 million and Rio Tinto is a big giant company who likes products that have billion-dollar revenue streams for them, what is the point of this? And some cynics have said, well, this is just more of Rio Tinto's green grandstanding. Yes, we're getting into this metal. We're going to make a little bit of it available. Economically, it's inconsequential to us, but it gets us good brownie points in the media that we're doing something about the green future. And that's a cynical view to take, but it is quite possible. And they had the CEO, J.S. Jacques, talking about how they would really like to expand this and make it a bigger sector. And that's interesting because you can have some low-level person blathering on about all this, wonderful new stuff we're doing, stripping something that would otherwise end up in a waste pile and launching a whole new product line. But I have a feeling they're actually quite serious about this. We do not know what sort of process they use and how they are recovering the scandium. It looks like it's that they claim it is breakthrough technology. They even use language like disruptive. So it's very promising. How much they can produce from that is not clear. Is it 5 to 10 tons per year? That's not very interesting. But if it's a little bit more, if they can get 20 to 30 tons per year, that's a good baseline to start developing the offtake market. And because they are a big company who can eat the upfront costs of developing this and marketing it and don't have a huge capex, this will make a lot of end users start taking the idea of aluminum scandium-based alloy seriously. And that's why this is a really good news for both Cleantech and Scandium International, who have been tearing the hair out at their inability to get off-takers to commit to take a future scandium supply. And it's interesting that this Rio Tinto story is very similar to something that Scandium International announced several weeks ago, which we talked about on Discovery Watch, which is that they are now going to go after the American copper producers who have SXEW circuits to process oxide copper. SCY has filed a patent for a process to recover scandium and other critical metals such as cobalt from the raffinate. After the solvent extraction is plucked out, the copper, it gets sent back on the pile, and everything else that's been dissolved, and it eventually just ends up staying in the heap leach. And they're going to approach the biggie in this space, which is Freeport, about putting in something very similar to what Rio Tinto has done with its Furé Titan operation, and at minimal capex, strip this out and produce a byproduct that isn't, really significant for, say, Rio Tinto's copper production. But if the United States itself ends up in a pickle as a result of the new Cold War and a lot of this stuff that normally comes from China isn't available, this becomes of strategic urgency. So if you want to see this article, it's in the International Mining magazine. It's normally subscription-based, but for the May issue, they have made it unrestricted. And anybody who's interested in scandium, I definitely suggest track this down by Google and read this. I think Rio Tinto moving into this space which everybody's ignored because scandium aluminum alloy is such a tiny fraction. At best, my 1,000-ton per annum dream would be worth only $2 billion. The aluminum industry is worth $100 billion. The aluminum guys haven't really cared about something like this, but to see Rio Tinto step up and make big noise about beginning to do this, I think this is a turning point for the whole scandium story.
We'll have more with John Kaiser right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, what's the latest for Great Bear Resources and its Dixie Gold project near Red Lake?
Great Bear has been really busy since getting bashed down from $9 all the way to $3.60 in March during the coronavirus meltdown. It's been as high as $13.20 recently. They've spun out the Great Bear royalties on the basis of one Great Bear royalty for every 4 Great Bear shares. That happened on May 5th. So if you bought it then or after, you don't get the royalty. The royalty entity will own a 2% net smelter return on the entire Dixie project, where they're looking at a 22-kilometer structure called the LP fault. It has numerous splays off it, and despite decades of exploration after Goldcorp revived the Red Lake camp, nobody realized that here was this very fertile structure, and seismic work has shown that this LP fault structure taps into the same crustal scale fault that feeds the Red Lake camp itself. And it's a different style of mineralization than the Red Lake style mineralization. It's more like the Timmins district. And that's what has helped Great Bear get an awful lot of traction, because if you have 20 kilometers of something equivalent to the Destor Porcupine break in the Timmins district area, that could be tens of millions of medium to high grade ounces. They also announced the results of a deep hole, one that they had deepened to 1,500 meters to test the Dixie Limb zone, which is what everything got started on in late 2018. And this hole intersected 19 meters of 10-gram gold, increasing the depth of it, but it also appears to have nicked the Dixie Hinge zone, which is not really, volumetrically large, but it appears to now coalesce with the rest of the Dixie Limb. So that gave the market a spurt when that news came out. And the day after, they announced a $20 million bought deal through Canaccord, $17 flow through, even though the stock's $11, $12. And not long after, they boosted it to $33 million by adding some more flow through and 725,000 shares non-flow through at $11. So that's $33 million extra on top of the already $21 million funded program that they have underway. So Great Bear is now in excellent shape to continue hammering the LP district. And this is not a game of trying to show we have 1 million ounces of 15-gram gold or something like that. They are focused right now on simply demonstrating the scale of the LP system, and let somebody just say, we can't stand any longer, we're going to buy out this company, own it lock, stock, and barrel, and then spend the next 10 years drilling hundreds of thousands of meters to properly delineate all these resources and put it into production down the road. And that's why they sort of spun out this royalty, because they wanted the shareholders to have something to hang on to down the road that could end up being extremely valuable if the initial promise of the LP fault is borne out by subsequent exploration.
We'll have more with John Kaiser right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with John Kaiser. John, has any of the Great Bear excitement flowed over to Golden Goliath and its parallel packwash fault structure to the south of Dixie?
It has not yet happened. I picked up coverage of Golden Goliath resources in February when I understood the story about how the packwash fault structure, which is to the south of the LP fault structure, some government seismic work had shown that at depth they connect into the same crustal scale fault that clearly that feeds the Red Lake district itself, but also appears to link up to the LP fault system where Great Bear is demonstrating all kinds of mineralization within the splays and shears that come off that fault structure. But the problem with the Kauai project of Golden Goliath is that this area awful lot of overburden. In fact, it's so thick that you can't even do soil sampling to get any meaningful data on it. And it has had some sporadic work in the past that hasn't been overly encouraging. So the perception is that the packwash fault, it's there, it's nice, it's pretty much unexplored, but it is not fertile for gold. So Golden Goliath is still sitting there at 6 cents or so. They did in late April announce a private placement, 6 million units at a nickel with a full 10-cent warrant, good for only a year, and then they boosted it to $500,000 a couple weeks later. So now it's 10 million units at a nickel with 20 million shares additional dilution. They did complete the airborne survey over the property, which has become the basis for Bob Middleton, their geophysicist, highlighting additional structures, like secondary structures that come off the main one. The main one itself is unlikely to have any gold in it. It's going to be the secondary and tertiary splays and shears that come off the main one that will hold the gold. And now that Paul Sabara and Bob Middleton are getting back on the property to initiate an IP survey program, and the IP survey will highlight the sulfide mineralization, and they did one in 2019 in parts that they thought were going to be great, but now they're filling in everything based on the airborne survey, which has told them, well, here's their structures that could have something. And they're also starting a till augering program. They're bringing in a little backhoe to try and dig through the overburden deep enough to get a meaningful till sample that could have, any sort of gold debris from bedrock that was exposed not too far from the location of the sample site. So this is all underway. The market is not yet mapping its excitement over the Great Bear and the LP structure to Golden Goliath to the south. Another junior BTU is also resuming work on its property, which is immediately to the south of Great Bear. So even though we appear to be in the beginnings of a bull market, it is still very much focused on projects where results clearly show that there is something substantial unfolding. And so the challenge for Golden Goliath over the next 2-3 months is to show that they have all these IP chargeability highs along this packwash fault, and that the till sample does reveal evidence that there is gold in the till in that general area, so that you're not just drilling geochemically blind on geophysical targets that could just simply be sulfides with no associated gold.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.